So it won't be long before we get to hear the famous Cheltenham roar.
Festival 2022.
And this will mark the opening of the Cheltenham Festival and one of my favourite weeks of the year for trading on horse racing. One of the reasons for this is that I do particularly well at Cheltenham. I'm famous, for want of a better word, at being able to win on all 28 races at Cheltenham. And not only have I done that on Betfair, but I've done it on BetStack as well. And one of the reasons for this is that I find the Cheltenham markets very readable. There are a lot of money that goes through the markets that sort of tends to slow down the price activity. And that means that I can actually understand what's going on the market with a bit more certainty than I can on a normal horse racing meeting. So in this video, what I wanted to explore is why that is particularly the case, but also we're going to look at some markets from last year, and I'm going to show you the sort of thing that I could see in the market and how that would have shaped the nature of my trading. I've been successfully betting and trading for over 2 decades. If you want more videos like this and you want me to describe more of what I do, then give us a like. If you want to talk to like-minded people, visit the BetAngel forum where you can do exactly that, but also visit our website where you can download a free trial of BetAngel. So if you've never traded Cheltenham before, you're going to be in for a bit of a surprise because the markets look and feel very different from the markets that you would have seen elsewhere over the course of the year. The majority of the year is made up of generally lower quality racing and lower quality handicaps, and the markets behave in a certain way, but they behave very differently from what you see at a Cheltenham. And part of the reason for that is the large amount of money that goes through the Cheltenham Festival. Each individual race will rack up millions of pounds, and as a consequence, the amount of money that you see sat on either side of the ladder is going to be pretty large. And if you put an order into the market, then you will tend to find that it takes a little while for that order to get matched. Now, the important thing is that over the years, generally the markets have got a little bit more volatile. So often a mistake that people make, or I've seen people make in recent years, is people are talking about the markets as though they were, and the way that they looked sort of 10 years ago. When in fact, over recent years, the markets have become a little bit more sort of wobbly, for want of a better word. More volatile is the correct word to use. But that means that you can actually bring into play the sort of tactics that you would typically use. Some markets will be a little bit more narrower in the way that they trade. In other words, what I'm trying to say here is the amount of money that comes through the market tends to sort of crush the average traded range. So if you're looking at a all-weather race on a Thursday evening and the favourite was priced at 3s, you'd see a huge traded range. At Cheltenham, you're not going to see that. It's going to be much smaller because the market's more certain about what the price should be, and the amount of money that's in the market would generally hold it into a smaller traded range. If you go back 15 years ago, very often the prices wouldn't move at all, but you tend to find now there is a little bit of movement within the market. And this brings on one of the big advantages of Cheltenham if you're learning to trade, and maybe you've never seen these markets before, or you have been trading but you're not sure how to trade Cheltenham. The way that I look at Cheltenham is it's a sort of a compressed, slowed down version of a normal market. I remember seeing somebody say that it was treacle trading or something like that. And that is exactly what it feels like, because if you're used to the cut and thrust of your day-to-day racing markets, they can be a bit chaotic at times. But when you're at Cheltenham, everything sort of slows down. And when you get a move, it's a very small move of maybe sort of, 4 or 5 ticks, or maybe at an extreme level, it may be 15 or 20. But typically, it's a very slow movement from one place to the other. And as a consequence, the amount of money that you can make, if you put £100 in a race at Wolverhampton and it moves this much, you're going to get a decent amount of money. But if you put £100 at Cheltenham, it's really not going to move that much. So you will not get as much money out of your trade. So the answer to that is to actually increase your stake. But of course, increasing your stake tends to freak a lot of people out. But the volatility at Cheltenham, the average traded range is lower, so it shouldn't freak you out. So I can tell you what to do, I just can't force you to do it. And I have discussed how the Cheltenham markets trade in another video. I did a brilliant video, even if I say so myself, last year, which ran through a number of different markets from the prior year to this video. And you should watch that video in conjunction with this one, because you'll notice similarities between what I'm about to describe to you. And you'll also see the results that I got last year at Cheltenham, because I recorded that video after Cheltenham had occurred. But what I wanted to do in this particular video was to have a look at some of the markets from last year. What I tend to do is I actively trade them, but I also fire up another PC and I record every single market that I actively trade, so I can go back and review it at the end of the day and in future years to understand what happened and why, and whether I could have traded it a little bit better. So I'm going to use some of those videos just to describe some simple trading setups for you that I saw last year, and to describe really fundamentally what you should be looking at this year. So this is often what people think about when they think about Cheltenham. You've got a competitive handicap here, so the markets are gonna work within a tight traded range. But you can see that there's sort of thousands of money above and below the current price, and there's not a great deal of movement within the market. But of course, when you encounter markets like this, you offer positions to both sides of the markets or above and below the current price, and you wait for the markets to fill them. And it can be a bit boring, but this can be surprisingly effective. So if you get a super competitive handicap like the one that we've got here, that's the sort of tactic that you would generally use. So I've frozen the recording here, and the reason for doing so is just to sort of draw your attention to the traded volumes on the right hand side. These are the things that I watch very closely at Cheltenham, because this will give you a clue as to where money is building up and on which side. So if you look at the favourite here, you can see, you know, it's roughly equal. You can see equal amounts of money have been matched on both sides, 33% on one and roughly 33 on the other. But if we look at the second favourite, you can see there's more money appearing at 13.5, which indicates that there's backing pressure on this particular runner in this particular market. And when you look at these and you study these intensely, then you get a much better feel for the way that the market's going. Now, of course, you know, big orders can come into the market and completely disrupt this, but fundamentally speaking, this is a lot of what you should be spending your time on, especially at Cheltenham. And if you record your screen in much the same way that I've done here, you can go back and look at the markets and see if you can understand them a little bit better by just seeing where that flow of money is. So yeah, it's always something important that you should be doing at Cheltenham. So when you get shorter prices at Cheltenham, you do get markets that act in a similar way to the sort of markets you see on a day-to-day basis. But you also get similar setups as a consequence. So if we look at the second favourite here, you can see from the volume that it's obviously come all the way in to a much shorter price. But if you look at that crossover point at threes, you can see there's nearly £15,000 waiting there, and there is no money traded on that amount. It's been traded for small amounts at 305, 310. So this has set itself up perfectly for a bounce in this particular market. So yeah, when you get shorter prices, very often the markets can behave in a similar manner to those that you see on a day-to-day basis. And to reinforce this point, you can see here the race is just about to go off and we have had our bounce. So when I'm reading the market, I'm looking intensely at any one particular runner or maybe a couple of runners. It takes a little bit more skill if you do more than one. But if you look at the favourite here at 305 and 310, you can see about 16% of the money is being matched on the favourite at 310. And you're looking for clues as to what's going on with the market and if there's somebody in there that wants to do something. So if you keep your eye on 305 and 310 and the volume there, you'll see any second now. There we go, it jumped to about 20. And in fact, the number above it at 315 moved as well. So basically somebody went into that market at that particular point and put a decent sized lay order in at 315. These are the sort of clues that you're looking for when you're actively trading order flow. So you can combine elements as well. So we've got a nice little trade here at the bottom of a crossover. There's a large amount of money at 6, and we've just seen a back order come in to take out 6.2, and you're sort of thinking, well, that probably doesn't help us getting a bounce off of the price at 6, which we'd like to lay out. But if you look at the amount of money that's getting matched at 6, you can see it's really weak. There's only 1% of the amount of money that's being traded on that horse that's actually getting matched at that particular level, and it's not particularly increasing. So you would turn your attention to 6.2 and say at this particular point, you know, is the money disappearing from there? Is more money getting matched there, especially in proportion to what we're seeing at 6? And this could present an excellent opportunity for you to get into the market. Also, if you look at it, you can see that the favourite, you know, the traded range is smaller because it's at Cheltenham, but the favourite is near the top end of its current traded range. So that's quite nice as well. But basically combining a few of those elements can lead you in
to the opportunity to get a nice little trade. So yeah, we're looking at several different elements here, all contributing to key factors that would lead us to sort of look at laying either at 6 if we can get filled, or perhaps laying at 6.2 when the money begins to sort of move away or thin out at that particular point. As long as those things are in place, then this probably represents a good opportunity for you. And again, we're looking here as we approach the start of this particular race, and you can see that indeed this would have been a pretty decent trade. And we can see that some of the things that we were talking about just a few seconds ago have transpired to be. And it's just, you follow a bit of logic, you look for confirming situations, you're building a picture of what's happening within the market. You can't get it right every time, but nonetheless looking at all of these key indicators, trying to find a safe place in the market to put a decent trade in with a bit of logic is how you would trade most of these races.
So knowing how to trade is one important thing, but knowing when to trade is another. And what I've presented to you here is a graph of turnover at Cheltenham by hour. And you can see how the money arrives in the market. And some notable things here, the morning of Cheltenham, obviously money begins to pick up. When the racing starts, it accelerates. And then when the result of the previous race is known, then it really begins to kick into full gear. So typically when I'm trading at Cheltenham, I will trade when that previous race is finished and I know the result, because that will give me a steer on what I'm likely to do in the very next race. And liquidity starts to pick up at that particular point. And there's so much money at Cheltenham that you can trade for extended periods of time. And of course, all of that really accelerates in the last 10 minutes. But you should really be out of your position about 2 to 3 minutes before the start of the race. If you leave it any longer than that, then you're going to get caught up in the melee that occurs just before the race gets underway. So really your trading window is up to 30 minutes. Whenever you feel comfortable or you see an opportunity in the market and you want to be out by 2 to 3 minutes at the absolute latest. So yeah, hopefully in this video you've learned some of the things that you should be doing when you're looking at the markets and looking for opportunities, and you should also know when to participate at the Cheltenham Festival.